Hi guys, Lee Gettess here with the Market Sense for the week of March 20th, 2018. The charts in this presentation are provided to us by the Trade Navigator software. That's from Genesis Financial Technologies. And we're looking at our weekly bonds here, the long-term bonds. They've been crawling up since the low, but not terribly impressive. We were kind of hoping they'd get back up to the lows of the sideways pattern here, and they still could, but they're not in any hurry to get there. And this week has already turned down. Instead of heading up to the 145.20 area where we thought they might go, they've actually held resistance at 144.24, which that's about as weak as we could have possibly anticipated. And now they're at a pretty critical area. The support here is, well, it's 143.20, give or take a few ticks. If they don't hold that support, and they certainly could hold that support, but if they don't, gosh, they're probably going down to the lower moving average there, 142.16, and they may be just going to test the lows here. The momentum indicator suggests that they have a good chance of holding this support. But we do have the Fed meeting, and it's widely anticipated that they're going to raise rates Wednesday afternoon. I don't think that's a bad thing. I think what they say about it might be a bad thing. Do they blame it on inflation or just a good economy? So, it's kind of a wild card, but they are at support that they really need to hold if they're going to move higher. And we have some information that they, should hold that support. Again, wild card from the Fed, though. And stocks, well, stocks have a much different situation. The big news to me, and I got to admit I wasn't really paying much attention to this, but the big news to me is our momentum indicator turned down when they had the move off of the highs back here the first week in February, and it stayed negative. None of this move up off of that low, the sort of angled back up a little bit, none of that has brought the indicator above the moving average, and that's not a good sign. And then last week when they turned down, I thought they might go down at least to the middle band. They haven't done that, didn't do that. But here they not only are not holding the middle band, which this week is, what is that, 27.44? But it sure looks like they're going down to test the 26.88 area here at the lower band. And boy, if they don't hold that, they could be ready to go test the low here, the actual low that you can see below 25.50. They do have the potential to turn back up. And again, what we're dealing with is the wild card of the Fed. The Fed will announce almost certainly a 0.25% rise in interest rates Wednesday afternoon. And what tends to happen is there tends to be a knee-jerk reaction Wednesday afternoon after the Fed does something. And then there's another reaction Thursday morning, which may or may not be the same as the Wednesday afternoon direction. So very difficult to anticipate much of anything here. But boy, that 26.88 area on the lower moving average there looks fairly critical. If they don't hold that, we could see a considerable amount more downside, and the momentum indicator down here is suggesting that that's quite possible. Now, just so you understand how this works, if they were to, react positively to the Fed news and take out this high, this indicator wouldn't look like this anymore. It would turn back up and be above, it'll be above its moving average probably, and of course then everything will look hunky-dory then. So, big wild card, good luck. That's what we've got for you today.